In today's video, I'd like to share with you few but pretty relevant points and insights that make me think that we might be very close to an inversion point for which Contextlogic stock. Do not forget that Rome was not built in a day, so we need to be still a little bit patient. Behind the trade here, welcome back to my channel. If you enjoyed this video, please do not forget to subscribe by clicking at the button on the bottom right part of the screen. As usual, this analysis is based on a 100% pure technical analysis approach. And before starting, just a very quick disclaimer, I'm not financial advisor and these are not financial advices. So do your own study and do your own considerations. So I'd like to start from the 4-hour charts here. And if we look at this red line support here, we see that it indicates the lowest price that was touched last year in 2021, which was $2.95. Yesterday, the price tried to retest the lowest price of 2021, but it didn't manage to make a lower low. So the price stopped at 296 and it bounced back. And we see from the volumes on the 4-hour chart from 7:30 CET time that the volumes were pretty significant in this bounce. So this tells me, first of all, that the $3, which we were able to maintain at the closing of the session yesterday, it's still a very relevant support. So we are now here in front of what we call triangle. This triangle might be sometime be perceived as a possible bearish pattern, because we might bounce here again and try to break out lower. But in this case, for many reasons that I'm going to share with you in this video, I really think that we might break this triangle upward. Okay, so what is making me think this? First of all, if we look at the volumes that were above the average, these were all volume of, let's say, green days, green 4-hour sessions. Okay, we have one here, and so it indicates to me that there is a strong interest to buy the stock at this level and to bring the price higher. So what I would expect in the next hour sessions, so first of all, I would expect the price to still continue dancing inside this triangle, maybe reaching again the 3.20 level as an example, or the $3.15 first. And after that, what I would expect is this moving average here, which stands at 327, which is the 21 moving average, which is basically moving a little bit upward and trying to cross this other moving average, which is the 50 moving average. Okay, so the moving averages are almost going to cross, and the more we push the price higher, the more possibilities we have to see this moving average here crossing the 50. And this might give us even more confidence that the price might go to this red resistance line here, trying to break this upward. Okay, so I would expect the price to continue dancing here and to at a certain point break this triangle upward. Now let's look at the daily chart and let's look at how the relative strength index and MACD indicators look like. So it's pretty clear to me, guys, that we have a very clear bullish divergence on the RSI. So the RSI is doing higher lows while the price is here stagnant at the $3 and making even lower lows. So from December the 3rd to December 17th, we are making lower lows, but the RSI is making higher lows, which means that the strength of the seller is kind of fading out. And if we look also at the MACD momentum indicator, we see that we also have a divergence, which is a bullish divergence here. So we have higher lows, but the price has been making lower lows since a lot of time. So these two divergences are really telling me that we might be to the conclusion of this bearish season. And as I said in a previous video, if you want to see the previous video, you will find it at the very end of this video. You will find a card that you can click on to access to the previous analysis. We are seeing that we are getting very close to where the apex of this falling wedge is. I'm pretty sure that we will not be able to go until the apex, which would mean that we would go at 60 cents, and I do not really believe this will happen, also for the divergences that I just talked about. But I mean, the price action is trying to go out from this situation and trying possibly to use the $3 still as a support and to break up. There is another reason, guy, why I think that 2022 might be our year, and this refers to I would say probably a more holistic consideration, but still very relevant to me. So in green here you will see the resistance that refers to the all-time high at $32, and again in red the all-time lows at $95. So all this movement, guys, all this bearish movement was made in a single year, in 2021, and I would expect 2022 to be able to retrace at least 38.2% of this leg down, which was impressive. So I really want to think that once we break this wedge here, we will be able to start our retracement movement to bring the price maybe not immediately to all-time highs, maybe not immediately in 2022, but at least to retrace a minimum of the leg down at the $14-15, and this would be the 38.2 Fibonacci level. So it makes definitely sense to believe that the 2021 downward movement might be retraced of a minimum of 38.2% in 2022. And just to close my video, I mentioned this in a previous video. Don't forget that we have two falling wedges. One has been broken already in June 21st, and the second one will probably be broken in the next couple of months, and whose targets are actually between $13 and $15, and the second wedge has a target of $30. So I believe we will be achieving these technical patterns and these technical targets coming from these technical patterns. So I really hope you enjoyed this video. Let's look how today's price action will behave, and I look forward to welcoming you in my channel for the next video update. Have a great day and have a great rest of the week.